Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack Technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
And welcome to Markets Now. I'm Michelle Rourke with Bryan Doherty of Total Farm Marketing. Livestock futures and milk trading mostly higher except for deferred hogs this morning, while we're seeing the grain trade mostly lower except some slight gains in the corn market. And Bryan, thanks for being with me. Let's talk first of all about the soybean market. We got a push yesterday on maybe some talk of China looking around for some beans out of the Pacific Northwest. We're setting back this morning. Is that because we just did not get any confirmation? Because, man, we hit some new highs for the move even overnight.
Yeah, I see no confirmation yet. So the market wants confirmation of rumors. We haven't seen that. Markets had a good push. Sometimes in that overnight, you get some pretty light trade and light volume. And if you trigger, in particular, some buy stops, they have to go searching for sell orders. But using May as an example, they did just push right back up to where it was a couple of days ago and then falter. So a little bit concerning this morning so far, trading lower. Uh, but there's really nice consolidation here. The B market is trading at the same price it has been for several days, which is I think that's a big win. Farmers continue to sell beans. However, I think we got to go back to last fall. I think farmers really sold a lot of beans. And so I think the beans are in the strong hands of the commercials. Farmers just don't have as many beans on hand. So that's a good thing if you want to be friendly in market. You don't want a lot of inventory in farmer hands. And really we're seeing, I think, the effect of that in the corn market, what just can't get out of the starting blocks in
Yeah.
this sideways pattern. And that's I think it's just a reflection of farmers holding a lot of corn, needing cash and selling some.
So, Bryan, do you feel like the market has digested this new tariff news, or are we still digesting that too?
I think we're all still digesting that, but in a simple world, it digested it in about 15 minutes after it was released. The market dropped down, came back, and now we're trading in a sideways pattern. And so when you get into the nuances of this emergency act that's the court ruled on, does it really change anything? President Trump can still put tariffs on. It's a waiting period now. Congress has to approve, and there's other avenues and methods. And some analysts that are what I'm going to call very versed in this field have said, well, look, this is actually a better position uh, than the previous, where there's a lot of subjectivity. This will lead to longer term better solutions, and the president still has his will and say in tariffs. It just has to get through Congress after a wait period.
Yeah. The other thing that's been supporting the soybeans, it's not just been a China story, it's also been biofuels. Soybean oil continues to make contract highs day after day. And are we getting close to a level where we've got maybe this robust RVO news priced into the soybean oil market? Are we getting close?
Well, I think you have to think you're getting close with a projected carryout at 350 million. So if we're kind of in the forest, as you will. So we're trying to look around and we're seeing all these different trees. Those are the things that you mentioned. We step back a little bit. 350 million bushels of carryout is still the number on the books. So the first question is, well, is that really accurate, right? Was I think there's some question to the yield number yet. So that'll be my bias as to why maybe the market quickly rebounded as well. Just maybe a belief that maybe there wasn't quite 53 plus bushels an acre. Not much to talk about in the southern hemisphere as far as weather, but when you start dissecting, okay, where does the energy component come in? Had about a 15% increase in crude oil prices over the last month. You've got soybean oil moving higher. You've got farmers that are light-handed on the soybeans. You've got a lot of short covering, speculative buying, and fund money. So you got a lot of variables, these trees, in the forest here. And in particular, that managed money has been very aggressive in buying beans. You can make the argument that makes sense or it doesn't make sense, but it's just a fact. They've been in the market. So if I'm a producer, what I want to be very aware of is that when the market does move up on fund buying, they may be buying for a reason or could be just adding to long positions. The market is very vulnerable to a very quick washout or drop. And we saw that back in November as well. The market peaked, and within a month, it was right back to where it started. So if you have beans, I would certainly be talking to your advisor or taking action or selling some beans or doing something to reward this paycheck rally. I call it paycheck because you get a paycheck when you sell beans. So keep your paycheck.
Wheat market is setting back this morning. This will be the third day down. Is this just some routine profit taking and a month, or are we done putting risk premium into that market?
Yes, yes, and no. So yes, likely some profit taking, sell stops being triggered once the market starts to falter. We put some weather premium to the market, but I don't think we're taking weather premium out of the market.
Okay.
Wheat has this, ability to disappoint. So there again, if I'm a wheat producer, I'm wanting to take advantage of this. Uh, However, I also want to be very respectful. That drought monitor map in February, you look at it, and I think most of the time I want to ignore it, but I have to be respectful of it. It's showing some big net drying, and that is a concern if you're a wheat producer in certain regions, or Colorado, Nebraska. You start to talk to those guys, and they are very concerned to the point that they want to be very reluctant as to how much defensive posturing they do in the new crop with forward contracts. They may do some other type of tool, but they're being very cautious on any forward selling, at least the customers that I'm talking to.
Gotcha. So, despite the fact that both soybeans and wheat are lower this morning, the corn market is trying to hold on to some slight gains. I've been surprised we haven't seen more first notice day selling or farmer selling going into first notice day. Is that done with? Is that why the market's holding together better than corn and or soybeans and wheat here?
I think you have two dynamics. You've got farmers that are continuously selling corn. If we step back and go back 8, 9 months, the corn market just never offered a great forward selling opportunity, or at least what farmers were looking for. And so there was a lot of unpriced corn this year. And also when we look at the calendar, it's February 25th. Time is getting by. Farmers need cash flow. We talked about coring bins for the last couple of months. It's logistically getting everything moved and getting in order for spring, which is around the corner. Our Texas guys are planting corn right now. So spring has sort of sprung. The farmer selling is there, but I don't think I think you saw last week and early this week the rolls already took place. The farmers were going to roll. I think they did it. They need to do it
Yeah.
by end of tomorrow. So I think that's already behind the market. Um, and so in the futures market, when there's a roll, what we see is a lifting of the shorts in the March and then a sell in the May, and we saw some of that. I think 2 days ago, but I think it's minimal this year. I'm more inclined to want to see what this corn market wants to do in conjunction with the recent rally in wheat and beans. If it can get enough head steam to break through this 465 in December, that's concerning me that we're not moving that market higher.
Yeah, I know you've written in your newsletter a couple of times now about the fact that we can't get above that overhead resistance in the December. We would need like a safrinha corn crop problem or something like that to push us over it, or what?
Well, I've always kind of coined that terminology or phrase that the markets move on perception, momentum, and attitude, right? So right now, what is
Okay.
the perception? In theory, it's a lot of corn, both domestically and worldwide. There are some issues with some of the Argentine crop, but if you really dissect that, we're not convinced it's enough to make a big dent. The safrinha corn is everything. There are some recent rains this week in Brazil. A net drying overall, so that'll be the next big thing that comes into the market as far as what to watch, and then planting progress and weather here at home. Uh, but again, the calendar is here end of February. What concerns me is carryout is larger than it was a year ago. A year ago, the high for the December contract in the calendar year was 478 and three quarters. This year it's about 473, and we're struggling to get through 465. A big concern there. And when I look at Michelle, okay, what's a scenario if we have another good crop? Well, typically, and if you look at the winter somewhat highs or where the market is in winter. So just in simple math, if you take 465 on December corn, it's not unusual to lose about 15% in the value.
Okay.
So that takes you down under $4, right around 392, 93. depending if you want to use 62 or 65 or what number you want to use. But the point of it is those are realistic downside assumptions, which are about 75 cents lower. So we need to think about how to defend that. And so that's my message to producers. That is one
Okay.
scenario. I can talk outlook all day long and what ifs, but my question is, well, okay, I got what ifs, but what are you as a farmer going to do to mitigate risk or take advantage of a rally?
For sure. Okay, cattle market is up here today, and right now we're still under the February highs in live cattle anyways. Boxes were up over $8 yesterday. Cash trade has been higher. Why can't we get through those highs, do you think?
Well, it's either the rubber band is being stretched and it's going to snap, and then we're going to just pop because the cash market is leading the way higher, or the market's telling us there's just a reluctance to believe that the consumer is going to pay a whole lot more than where the market is currently priced. And we saw this back in the fall as well when we saw the same type of futures trade. Futures actually got a little bit higher, but then it quickly lost that ground and it lost it in a
Hmm.
pretty big way. I don't think there's a quick fix, not to take issue with the president, but I don't know how he's going to bring beef prices down if people want to pay for it. So, um, you only can do that through increased supply, and there's no quick remedy to that. The dairy herd is increasing ever so little, but it's increasing, and the dairy on beef is a big deal. But that's something that isn't going to replace 5 to 10 years of herd reduction. So I don't. As long as the consumer is willing to pay it, it looks like the market is in a good spot. Maybe it'll go a little bit higher, but I don't think there's a lot of downside risk in the near term, at least from what we can tell. And now you're getting into the winter weather where the feedlots get sloppy and weight gain can be mitigated. So just hard to be too negative into this March April
Sure.
window.
Sure. Okay, let's wrap up with the milk market, which actually the back months are starting to show some life. We've got some of those deferreds like above the $18 mark. What's driving this, and can we keep going?
Well, I think what's driving the back months is just the perception that there will be a limited amount of heifers available to fill the herd that is currently reflecting cows that have been kept in one more lactation and one more cycle for another calf. The revenue stream from calves is just a very important ingredient to dairy producers, and that doesn't appear like it's going to go away quickly. That being said, you gotta like the volatility. There's more volatility in the dairy market the last month than in the last year, and that's telling us something. That product is a good value, that low prices eventually cure low prices. Demand builds in low prices. Demand doesn't shift dramatically when prices go down. It builds over time. And I think there's a growing confidence when you look at the global dairy trade. 4 consecutive sessions now, sessions every 2 weeks, 4 consecutive sessions of positive activity worldwide. Prices are stabilizing. I don't mean to be Debbie Downer, though. I just don't know if we got bull markets ahead right now. I think the rallies that come and on some of these spike days where there's some big pushes, a lot of that's technical buying. Look to be a defender, look to sell. How do you do that? Talk to your milk plant, talk to your
Yeah,
advisor, get your orders in. So when these spikes come and we're 2 or 3 days up sharply, followed by 2 or 3 days down sharply, you're not feeling that sinking, terrible feeling in your stomach that you should have done something. Get the orders in and let the market take care of it for you if it gets to those levels.
for sure. Very good advice. Thanks so much. Brian Doherty with Total Farm Marketing. That
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durastack Trait Technology, featuring 3 powerful modes of action to strike corn rootworm at full force, outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at Durastack.com. Available for the 2027 season.